Sure.
This is a general explanation of the accounting sheet from
Sure.
top to bottom, just so I can for later on.
Okay, so this is just an example of the sheets. You just want to make sure the first column, the tab here, is going to be previous balance. If the tenant doesn't pay for whatever reason, let's go to January. The amount received was 0. So in February, that means they owed $845. Previous balance and their current balance. These automatically adds up on its own to the third column, which is the total amount due. And then the tab under that is going to be the amount received. Now, hopefully, you always want it to be the same as the amount due, but they don't always pay. So then whatever you receive, you put it under here. The next one is going to be your deductions, and I put it in red so you know it's a deduction. First one's always going to be the management fee. The second one's going to be any repairs. This is for make-readies or rehab or work orders. If this is a wrap mortgage, you'll have another line under here for mortgage.
So it'll be a fourth deduction.
Exactly. But this one's not a wrap. So then the next one is just going to say miscellaneous. Miscellaneous is going to be anything. Property taxes. If you're deducting cash flow from one property to pay for another property, will go under miscellaneous. If you're deducting a wiring fee, incoming wiring fee, or outgoing wire fee, put that under miscellaneous.
Okay. And you log the miscellaneous description on the bottom.
Exactly. The next one after that is going to be your addition. They're in green, just as a reminder that we're adding it. The first one is going to be the addition to principal. So let's say, for example, if, let's go to March as a better example. In March, the tenant owed $1,690. They paid $1,690. If they paid an additional dollar, I wouldn't put that they paid $1,690. I would put $1,690 is what they were due and what they paid. The extra dollar they paid will go right here under addition to principal, because technically it's principal payment. So don't put it up here, put it under addition to principal. And then I have another one for miscellaneous addition. This is for if you're taking cash flow from another property to pay for this property, you'll put it here. If the investor sent funds, you'll put it here. Sometimes tenants will pay extra towards taxes. If they're taxed, they have a tax short, it will go here. If they're reimbursing an investor for a foreclosure fee of $360, that will go here under miscellaneous. And now everything here gets added automatically in the net cash flow column. So you have the option after the net cash flow to either pay the investor the net cash flow or hold it in their escrow balance. So just don't forget, whenever you're doing the escrow balance, you need to add whatever is in the previous amount to the current amount. So the reason why this for March is $3,194.28 is because I added the February balance to the current balance, which gave me that amount. Don't forget to do that, because sometimes people do forget to add the previous amount. Same thing as if you're going to pay them an amount. You can add the two amounts together, and that will be that amount there. And then whatever notes you need to make, put it here in the bottom. There are some months when you won't have anything, but some months you will. So just put it here. The investors don't read it anyway, but it's really for yourself.
Okay, so just to summary, the top part of the sheet
Go ahead.
is more for the tenant buyers accounting, what they have, their balances rolling forward, what they've paid or what they owe on the payment stream. Then from there, it kind of rolls into the investor account at the bottom, minusing fees, adding fees from other properties that are being diverted, and then the investor's final escrow accounting on the bottom. So this first top part is more for tenant buyers, then it hits the investor on the bottom.
Yeah, and you'll have some that seem like very complicated, has a lot of data, like Rajiv's. And then you're going to have some other ones that are like really easy, like Raji. So Raji is very easy. He has a tenant that pays every single month. As you can see, they never have a previous balance. Every month they pay the same amount. They never pay anything over. So it's very easy. Bam, we got this much. We deducted our $79. He gets his cash flow, no issues.
And he has a zero escrow balance.
Exactly. That means he gets his cash flow every single month.
Okay.
So majority of them are gonna look like this one.
Okay.
So you should be fine. And then I just have the investor escrow. This is just a miscellaneous sheet that I created. It's not for any one particular property. I created this sheet for properties that have sold already. So I don't have, maybe they sold it a year ago. I don't want to keep bringing the same properties year after year, especially when the investor doesn't own it anymore. But sometimes we might need to go back and add or subtract a charge.
Okay.
I need a place to put it. So that's why I'll put it under the investor escrow, and it's called the miscellaneous funds sheet. Sometimes an investor will also send money for us to hold for them, which is, I don't know why they do that, but they do that. Okay. So I need a place to put it somewhere to notate that we got it. So I'll also use the investor escrow sheet. So this one looks like 2016, because we always add December. I always have December from the previous year, just for reference. He had a negative $25.70 for whatever reason. So he kept on carrying it, and then in July or June, no, it was July, I decided, I'm tired of carrying that negative $25. So I took the funds from his forest house and I diverted it. And you'll see under July, there's a miscellaneous fee of $25.70. And under the notes, all it says is miscellaneous deducted to divert funds to investor escrow balance.
Okay.
And under investor escrow balance, it basically has the same note, just reversed.
Okay.
And now he's finally zeroed out. And once he's zeroed out, I'm done.
It's starting to make sense now.
Okay.